Hello everyone, it's me again. I'm back with another video about precious metals. So, in today's video we're going to be talking about gold. So, in my previous video we talked about silver, silver bars, silver coins, silver rounds, junk silver, things like that. But today we're going to be talking about gold, which in my opinion is they're both good investments, but I personally like gold more. I think it's a better store value. Plus, you can store more value in a smaller space, opposed to silver, which gets very, very heavy. Something that people don't really consider whenever they're investing in silver is how heavy this stuff is. I mean, a monster box of Silver Eagles or Krugerrands or anything like that weighs about 46 pounds. So, if you have 3 or 4 monster boxes in your closet and you have to bug out and run away, you are probably going to have a really hard time carrying all of that with you. So, gold, in my opinion, is a better store value over time. I think that it's a very good thing to buy, especially if you're just thinking about diversifying your portfolio, if you're heavily invested in the stock market, or you got bonds or CDs or any of the other traditional investment avenues. But gold is a fantastic thing. I mean, it's been around since the beginning of time. It's been money since the very beginning of time. In our coin shop right now, we have a gold aureus of Julius Caesar that was minted before the year 44 BC, which was the year of his assassination. And, back then they used gold, and today, here we have a gold eagle. The United States government still makes these gold coins, which, of course, it has a face value of $10. I mean, you'd never spend this for $10, but, it still is a monetary unit. So, gold has been, is, and will continue to be money. So, contrary to popular belief, there's a lot of gold out there. A lot of people talk about how, oh, the U.S. doesn't have any more gold, and, all these other countries are buying up all the gold. We have no idea how much gold is actually out there. I mean, you could never even imagine the amount of gold that goes between countries. But, to be able to slice off a piece of that pie for yourself and gain financial independence from a currency that is basically just continually inflating itself to death is a really good feeling. I think that a lot more people should gain the ability to buy and sell and trade gold and silver, just like people used to back in the day. So here's the quick guide to investing in gold. So just like silver, there's many different denominations, and there's also premiums, and it's all directly tied to the spot price. So if you didn't watch my silver video, here's a very brief overview of spot price. So spot price is the market value of any of the precious metals for the most part. So on any given day, you can go and you can check the spot price of gold if you're interested in buying gold. And you can look at the ask and bid price. So the ask price is what we use to sell over the counter to customers at the coin shop. So the bid price is what we use whenever we're buying stuff over the counter from customers. So those are the two different things with the spot price. So the premiums for gold work a little bit differently than they do for silver. So a premium is basically just a fee over the spot price. You're going to pay that whenever you go to an online shop or a retail shop in your town, or you're going to pay that whenever you order from a catalog or wherever else you're going to buy gold and silver from. You're going to pay a premium over the spot price. So premiums work differently with gold than with silver, because typically with silver you're going to be talking about dollar amounts. So like Silver Eagles, for example, are 540 over spot right now at the time of this video, as opposed to Gold Eagles, which are going to have a percentage over spot. So your typical premium for a 1-ounce Gold Eagle is going to be between 4 and 5.5% wherever you're shopping, depending on if they have sales or not. But it generally works the same. I have a tiered system for gold, just like I do for silver whenever I'm describing this to customers. So typically you have your higher premium, mid premium, and lower premium products. So here I have a couple of examples of some of those things. So in the higher tier, I would stick Gold Eagles. So Gold Eagles are definitely going to be in that higher tier premium zone. This is actually a Mexican Libertad. So this right here is a very beautiful coin. It's one of my personal favorites. I absolutely love these coins, but I only have one. But these are really awesome. I love these. These are also kind of in that top tier of premium. But people don't really buy those for investment because the premiums are so high. this right here is what I would consider to be in the mid tier. So this would be a gold panda, which are typically, I mean, it depends on the years. Some people collect these and they have more valuable years, like some of the ones in their 80s that are a little bit more popular in terms of numismatic collectibles. But this right here is a 1/20th ounce gold panda. So in terms of, let's see, in terms of size, this thing is tiny. This thing is absolutely ridiculously small. So if you're an actual investor in gold and you want to invest some money, these are more like novelties. So 20th ounce and 1/50th of an ounce. So look at the difference in size there. I mean, just look at the difference in a 1/4 ounce. This isn't even a full ounce. Look at the size difference. It's pretty insane. But these are more novelty items. You know, I bought these on a whim. This is not for gold investment purposes whatsoever. I just bought these because they were a good price. But you can typically find novelty stuff like that for better prices. Then you have the lower echelon of pricing. So that's all your gram bars. This one's a really beautiful one. This is from the Perth Mint. But this is the lower tier for gold investment in terms of premium. So gram bars are a little bit different. They kind of have like a thing of their own. So your very common denominations or sizes of gold bars in terms of grams, they're going to start off at 1/2 gram, 1 gram, 2 gram, 2.5 gram, 5 gram, 10 gram, 20 gram, and then 1 ounce. Of course, there's sizes all in between there as well, but those are the most common that you see floating around in the wild. So just like with anything else, the smaller the denomination, the higher the premium becomes. So like on a 1 gram gold bar, you're going to be paying 15% premium, as opposed to a 5 gram, which would probably be somewhere around 10 or 11%. So whenever you go up to 10 gram, you'll pay maybe 8%. You go up to 20 gram, you'll pay about 6. And then a 1 ounce gold bar, you're going to have the best premium, the best price. Typically, they're about 3% over the spot price. So that's kind of how bars work. They're a little bit cheaper, but just like with anything else, what I explained in the silver video is that you get what you pay for. So you're going to pay a little bit more for gold eagles or libertads, but you're also going to get more in return whenever you go back to sell them. So if you come into a shop like the one that I work at, and you bring me a gold eagle, I will pay you more than if you brought me a 5 gram gold bar. So at the time of this video, gold eagles and gold buffaloes are going for about 1% over spot. All of the foreign sovereign gold coins are going to be going for spot, and all of the gram bars, 1 ounce bars, 10 ounce bars, any of those other lower premium gold products, those are going to be 98% of melt value. So that'd be 2% under spot. I mean, you get what you pay for. It's kind of one of those things, you have to weigh them out because the market changes constantly. It's not like a end-all, be-all, answer to all of this stuff. Sometimes it's a better deal to buy gold eagles. Sometimes it's a better deal to buy foreign sovereigns. Sometimes it's a better deal to buy bars. But my deal with this whole thing is that I usually don't buy bars. I just really like this one. And the reason why is because anybody can fake a piece of plastic. So you see this, you can't touch that bar. You don't know what the bar actually feels like. You're feeling the piece of plastic that it's in. Anybody can fake this. The reason why I know that this is legitimate is because at our shop we have a gun that tells us the metal content. But, if you're just somebody on the street, you have no idea. To me, it's not always the best investment to buy gold bars. Just for that reason. If you buy from a reputable coin shop or online at a reputable dealer like SD Bullion, JM Bullion, those places, you're not going to be buying a fake gold bar. But if you go to some sketchier websites on the internet, or you may go to some sketchier pawn shops or things of that sort, that's where you have to watch out for the fake bars. Because they are out there. I've seen them before. And they're very tricky to catch. But if you buy from reputable dealers, you usually won't have that problem. I have never come across anybody that has any ounce of self-respect that has ever actually sold anyone a fake 1 ounce or 5 gram or whatever gold bar. But yeah, that's my basic gold video. That's kind of how gold investment works in my world. And you know, I got plenty of other videos planned. You know, I do this for a living, so I have access to many different things, many different video ideas coming for the future. But this is a quick start guide to gold. You know, very, very basic, very, very bare bones. But yeah, this is pretty much all the info that you need to not be completely shocked if you go into a coin shop or a precious metal shop in the future. So I hope you liked the video. Please like and subscribe. It really helps this information to get out to people so that they can invest in gold just like you and me. And yeah, please do not forget to do those things. I hope you really liked the video, and I'll see y'all next time.